Hey, it's Christopher Smith. Here's an update on the FibLines indicator for April 17th, 2016. So one of my subscribers pointed out to me recently that the version of FibLines downloaded from the Fib Cell Store did not include the FibLines deflection index and effectiveness measures and arrows and stuff that I did on the blog post earlier in the year. So I took that as an opportunity to go in and do some enhancements to the indicator. And you can see those enhancements by going to Properties of FibLines. So along with the properties that I added recently to show the level 1 through 4 lines, I added an option here called Show Effectiveness. And if that's set to yes, then up in the upper left corner, you should see the deflection index being plotted for the chart. Remember, the deflection index is simply the number of bars of all the bars being displayed that had a successful 3-line deflection off of one of the fib lines, or the first 3 level fib lines, defined as a lower close, an upper close, and a lower for a downside deflection, or a higher, lower, higher close for an upside deflection. And one thing to keep in mind about the deflection index is that this value is dependent on the chart time frame being displayed. So for instance, in this case, the Q is up 0.08. If I were to go to 20-year weekly, it's going to be a totally different number. So just keep your chart time frames consistent. If you're using this measure to determine how effective you think the fib lines are, make sure you do it from symbol to symbol with consistent time frames and bar time frame displays. Okay. Okay. Next up is the arrows. The arrows is kind of a cool feature here that makes it easy to visually identify 3-bar reversals. So this is a new property in here called Show Level 1 Arrows all the way through Show Level 3. We don't go to showing arrows all the way to Level 4, but let's turn the 1 and 2 levels on here and go over and take a look at one of my favorites, which is Gilead. And we'll go to a shorter term daily here. And you'll see that this is what it looks like with the arrow signs. So see in this case recently with Gilead, we had not perfect, but we had very narrow 3-bar reversal off of this red line here where you had close, a higher close, and then a close down. It would be a downward deflection. And note that the bar sequences are defined by the difference between the high and the low, the average price between the days the bars open and close. So in this case, the average was ever so higher than it was over here, and that's why this was considered an up followed by a down close. I also remember that in 3-bar reversals, the arrows are always plotted on the last bar in the 3-bar pattern, and the middle of the 2 bars has to cross over the line in question, in this case the red line. So if we zoom out a little bit, we can see that we had a 3-bar reversal off the bottom here with Gilead moving upwards ever since. So that's the cool thing about the arrows. They make it easy to see reversals. They may help you, they might not. For instance, in the case of ADP, let's go over to there. You'll see that we seem to have had an upside reversal off the line here, then a down and an up, and now it seems like prices are just moving sideways, and the arrows really don't do much help in that case. So you can always turn them off if they don't help, but as I said in the Measuring FibLines Effectiveness video, sometimes the lines are points of deflection, and sometimes price is deflected off the line, and sometimes price hugs the line or is attracted to the line. That's what we're seeing recently here with ADP, as it hugs the 423% line, which is right about all-time high. So it's interesting to see what happens with that one. Okay, next up is Goldman Sachs. We can see that Goldman had a nice move here recently. Huge rally in the XLF this past week. Prices have been moving more or less in a channel here, and recently broke up to this high and got deflected right here at this yellow line. So Goldman Sachs, I think is a buy that comes back down to this uprising trend line here. Let's keep in mind earnings are coming up, I believe, on the 19th, which is a Tuesday, 2 days from now. So be careful there. But I would become a buyer of Goldman Sachs if we see a pullback to the bottom of this channel here, down to say the 150 area by that red line. I would look to either add some stock or sell puts at the 150 level and take assignment anything below 150 if you're interested in doing that. So that's Goldman Sachs. Next up we have PayPal. which has been sort of moving sideways here, kind of stuck at the 100% line, as you can see with the sequence of up and down arrows here, and reflected pretty nicely here off of this upper orange line here just recently. PayPal, we have earnings coming up. Let me just double check that. Yeah, taking a look at E-Trade here, PayPal's earnings coming up on 4/27. So I think it's pretty safe to say prices are sort of on hold pending that. The other one I didn't talk about is Facebook. Now, Facebook, as you know, is one of my favorites. Recently, the range bands on the daily went red, and prices seem to have broken this upsloping trend line here to the downside. So that might look ominous from a technical perspective. But take a look back at Facebook. I look at Facebook longer term here. I found that there were many periods where it sold off really badly just to rally higher. Like here's a case where you had a big move up, but before that the range bands went negative. You had sort of a period of doubt that went into earnings. Since the company's been doubted all along, it was really going to do as well as it did. So it does have these nasty sell-offs and then resume. But that's why I'm thinking the same thing's going to happen. See, here's another good example. You had a big sell-off and then a big rally up to the all-time high at the 118 area here. So I'm expecting that I'm basically saying in this case I believe the fundamentals trump the technicals, and I'm going to stick with it even though it doesn't look good, because in the past it sold off a lot and ended up moving ever higher. So that's the case again. I think that fundamentals trump the technicals, and we see with Facebook we have earnings coming up on 4/27. All right, I think that's all the charts I had. I did want to mention general market SPY or ES, for example, is coming up against this this line here, which I believe is the 261, and it's been a point of deflection many times in the past. So I would expect prices to go sideways here, take a pause or whatever, or potentially, I mean, we can run out to highs, but it's hard to say. And SPY is also a similar chart pattern there, with prices coming up to the 261 there. Okay, one other thing I want to point out is how I just show you how I use how I scan the charts with the FibLines symbols. So basically, I built a watch list of personal watch list called FibLines symbols that I imported from the text file included with the FibLines indicator. And basically, you just link this by selecting the red button with the active chart up here with the red button over here, and then you can just click on each one of the FibLines symbols and cruise through them and see look for opportunities in using that. So that's the way I scan the indicator. The other thing I'd like to point out is that this new version up here on the FibTools Sell Store, and free update available, of course, to FibTools subscribers. And you can see it right here, FibTools, FibLines full indicator for 415, not 2016. That again includes, that's the paid version. FibLines includes support for 220 symbols, Dow 30, NASDAQ 100, select sector, ETFs, gold, oil, dollar, it's all in there. Check it out, and that's available in the FibTools Sell Score. Includes 1 year of maintenance. So that's it. Thanks very much for watching this video, and good luck with your trading, and have a great day.